Let's first review last week's market action and then talk about the outlook for next week. Last week covered January 10th to January 18th. Bitcoin's weekly high closed at $97,951, and the weekly low was $90,120. This week, price managed to hold above the midpoint. This time, we finally broke through the 94,000 level. I had been waiting for this for a long time, and at one point, I almost thought it would fail again. Originally, my view was that before January 13th, price would either stay in consolidation or rebound. However, on January 5th, price was once again suppressed at the 94,000 level, so it was hard to guarantee whether it could push higher. Psychologically, I was preparing for a risk zone where price might enter consolidation and base building from the 13th through early February. That assumption was made under a bullish outlook. In the end, Bitcoin pushed back up at the key timing on the 13th. This rebound had also been anticipated for a long time. We started talking about it from the very first attempt to break 94,000. Before January 13th, my view was always consolidation or rebound. Reaching the 97,000 level was definitely a good sign, but it would have been even better if the 99,000 target could be completed. I did my best to give timely reminders in the daily updates. If you were watching the market at the same time I was explaining it, entering in time would not have been an issue. Because at that level, if price had dropped, it would have turned into a high-risk zone, around 80,000. When I was watching the charts in the morning, I noticed that aside from resistance from the purple line on the 4-hour chart, the other hourly charts were not looking bad at all. They were slowly trending upward. Then I saw that the purple line on the 4-hour chart had started to curl upward slightly, so I reminded everyone about the possibility of an upward move. The 97,000 level has been mentioned many times. For a rebound, we were looking at the range between 97,000 and 99,000, but the prerequisite for any rebound was holding firmly above 94,000. This rebound zone is also our highest target for January. At the moment, price is approaching the third target. The only uncertainty is whether there will be a short upward push over the next couple of days. If it does break upward, you need to clearly understand that price is very likely to pull back quickly. Overhead selling pressure is still there, and upside space is limited, so another pullback or consolidation would be completely normal. After all, we are still below the bull-bear dividing line. If the 99,000 level can be broken, that would be a sign of strength, and once price is pushed up, there is a high probability that the support level will be lifted. If you are trying to trade this short-term move, stop losses must be set clearly. Personally, I think a safer stop loss around 95,000 is more conservative. This has already been discussed in the daily updates and with the group. Ethereum's weekly high closed at $3,403, achieving all of its targets. The weekly low closed at $3,065. Similar to Bitcoin, Ethereum also held above the midpoint this week. There really isn't much more to say, as I have been repeating the same points for 3 consecutive months. We will continue to observe whether price can hold during the pullback after this rebound ends. In my view, we are currently in the January high zone, with about half a month left. The best case scenario is continued consolidation. Next week runs from January 19th to January 25th. I won't read out the specific levels. You can take a screenshot and save them. Bitcoin needs to firmly hold above $94,400 in order to expect upside targets. Ethereum needs to firmly hold above $3,260 in order to expect upside targets. If the midpoint cannot be held, you need to be very clear that upside targets are no longer possible. At this level, if price tries to spike above 99,000 over the next couple of days, it is very likely to quickly push into 100,000 and then pull back just as fast. After that, what we still need to watch is whether Bitcoin can avoid breaking below 88,000 over the remaining half month. In other words, can the zone between 86,000 and 89,000 hold? Breaking below 88,000 would definitely not be good, because 88,000 is the strength-weakness dividing line for January, and it is clearly not advisable for major players to let price fall below it. At the moment, this is still only a rebound signal, not a signal that the trend has fully returned. Once the January high targets are fully completed, The remaining options are either consolidation or a decline. We'll just continue to watch patiently. Alright, that's it for today. Weekly forecasts should never be viewed alone. They must be combined with daily and monthly charts. The daily charts fill in what the weekly might miss. I wish you all the best. May you buy at the bottom and sell at the top. Don't forget to like, share, and subscribe to my channel if you found this helpful. Send this to your friends too. Thanks for watching, and I'll see you in the next one.